Hello everyone, welcome back, and I hope you're all good. Pretty much today, we're going to be taking a look on some interesting things that are happening in crypto right now. So it's not about just prices going up and down. Behind the scenes, institutions are quietly making moves that could shape the next phase of the entire market. So today, we're looking at three main stories that show where crypto might actually be heading. And the first one involves Solana. Let's start with something that sounds like bad news, but might actually be bullish. Since spot Solana ETFs launched back in July, the price of Solana has dropped about 57%. And honestly, that's about the worst timing you could possibly have when launching a new ETF. Normally, when an asset falls that much after a new investment product launches, investors panic and start pulling their money out. But that's not what's happened here. Despite that massive drop, the Solana ETFs have still managed to attract around $1.5 billion in inflows. Even more interesting is that they've largely held onto that money. Investors haven't rushed for exits, and the type of investors involved tells an even bigger story. Around 50% of those ETF assets come from 13F filers. Now, if you're not familiar with that term, 13F filers are large institutional investors. So, hedge funds, asset managers, and major investment firms that are required to report their holdings to regulators. So, in other words, this isn't just retail speculation, this is serious institutional capital. And when institutions are willing to allocate billions into an asset, even after a 57% drawdown, that usually means they're thinking long term. They're not chasing hype, they're positioning for what they believe could happen in the next cycle. And that leads me to the second story, because one of the largest asset managers in the world is also making big moves in the broader crypto ecosystem. And if you couldn't guess who I'm talking about, we are talking about BlackRock. BlackRock currently manages trillions of dollars in assets, and recently its $26 billion private credit fund has been expanding its involvement in blockchain-based financial infrastructure. So private credit is already one of the fastest growing areas of traditional finance. But that's what's interesting is how firms like BlackRock are exploring ways to bring these types of assets on a chain through tokenization. Realistically, the idea is simple. Instead of traditional financial assets being locked inside complex banking systems, they could be represented as digital tokens on blockchains. That would potentially allow faster settlements, more transparency, and global accessibility. And when a company the size of BlackRock starts experimenting with these ideas, it sends a pretty strong signal because institutions rarely move first. They usually move when they believe something is becoming inevitable, which brings us to the third big trend happening in crypto right now. Governments around the world are beginning to build clearer regulatory frameworks for digital assets. For years, one of the biggest barriers to institutional investment in crypto has been uncertainty. Large funds simply won't allocate capital if the rules aren't clear. Well, that's starting to change. More countries are developing regulations around crypto ETFs, derivatives trading, and digital asset custody. And while regulation can sometimes feel restrictive, it also does something important. It makes the market safer for large institutions to participate. When you look at these three stories together, a bigger picture starts to form. Institutional investors are accumulating assets like Solana, massive asset managers like BlackRock are exploring blockchain-based finance, and governments are slowly building the legal framework that allows these markets to grow. In other words, crypto isn't just surviving, it's evolving. And the next phase of the industry might be defined less by hype and more by institutions quietly building the infrastructure of the future financial system. But the real question is, which projects will benefit the most from that shift? Let me know what you think in the comments below. And now, before we wrap up, let's quickly talk about what's happening in crypto on the chart right now, because technically, things are getting interesting. For the past several weeks, Bitcoin has mostly been trading inside a consolidation range. The market hasn't really chosen a clear direction yet, but recently, something important happened. Price pushed up and tested the upper boundary of that range. And at first, it looked like we might see a breakout. Instead, the market reacted aggressively and dropped right back into the consolidation zone. On the daily time frame, that rejection is very clear. After that move, we actually saw two technical signals that traders often watch for. First, being the last bullish fair value gap, which had previously been acting as support. This got inverted. And then secondly, the market produced a full bearish engulfing candle that took out the previous key high. In simple terms, that's a strong sign that buyers lost momentum at the top of the range. Because of that rejection, the more likely scenario right now is that Bitcoin could move down and retest the lower boundary of the consolidation, which sits around the 60k level. That's currently the main level traders are watching. However, markets rarely move in straight lines. At the beginning of the new week, we could see a short-term correction upward, potentially back into the resistance area where that inverted bullish gap sits. If the price gets rejected there again, it would strengthen the bearish scenario towards 60k. But there's one level that completely changes the whole picture. If Bitcoin manages to break and hold above 74k, the entire outlook shifts. At that point, the consolidation would effectively be over. The bullish trend would likely continue, and the next major target on the chart would sit around 80k. So right now, the market is at a pretty critical moment. Either we see a move downward towards 60k, or a breakout above 74k that could send Bitcoin into the next leg of the bull run. So the next few days could be very important for the direction of the entire crypto market. That is where currently Bitcoin is sat. And those are the key levels to look out for. I'd like to see what you guys think in the comments below. So let me know if you think we're going to go down towards 60k or we're going to break down and hold above 74k. Feel free to subscribe, and if you haven't already, check out the other videos on the channel. So thank you for watching, and I will see you in the next one.